Good evening. I'm Michael Filigera with logicalsignals.com, and this is the Elliott wave update for the NASDAQ 100 NQ for Monday, March 1st, 2021. First thing I need to do is we're going to begin on that hourly chart. We're just going to recap real quick. We continue to count the initial 5 waves down on a cycle level. And within that, we're going to have 5 waves of primary degree. And within the first wave down, which we now have, I've made a slight change in how I was counting it. Is I kind of got not off base, but it just did not feel right what was happening and then what was happening here. It forced me to take a stand back and to look at how I had counted it thus far. And previously, this 3 was up here and the 4 was over here, which then made this 1, 2, and then the start of a 3, of a third wave down. And I have said all along that wave 3, no matter where they fall within a 5 wave pattern, whether it be a rally or a decline, the third wave is always going to be the longest and the strongest within the sequence. So this particular sequence, it's a sequence of minor waves to form an intermediate wave. And here we had 1, a 2, and then the third subdivided, which was perfect because it's the longest and the strongest, bringing the third, the conclusion of the third down here, which I had previously labeled as a much higher degree. So then that became 4, and then the 5th wave, which again subdivided into its own 5 wave structure, but leaving the third wave as the longest and the strongest. So it continued to work as it needed to in terms of structure and some rules. And so this ended up completing intermediate wave 3. Then we had a beautiful ABC up, which remained the same, but it got labeled intermediate wave 4. Then we got the intermediate 5th wave, which again, we had labeled as 5 waves down. We just changed the degree. And then that brought us to a 5 of an intermediate 5 of a primary 1. So what we're now counting and what we're working through right now is intermediate wave 2, which is going to be an ABC structure on an intermediate level. So if we're looking at these particular waves, these intermediate level waves can take between 1, 2, 3 days up to a week, possibly, to unfold in their entirety. And so we now can put some Fibonacci on there, which I'm going to do, and we can start to put some parameters around this structure, which actually looks pretty sloppy. So we're going to have to open that up and take a look. Let's put some Fibonacci retracements on there so we can get an idea of what we think the potential is for a wave 2 correction. Gotta get that a little bit closer. So let's go back over to that. Come down. Perfect. All right, so I'm going to come down here. And I like to get these lined up as best as I can. And it's 62 and 51. So bring that up, 61. We're going to take it. Okay, so what we've already seen now in this wave 2 is that it's come up and it's come above the 50% retracement level. Not uncommon for wave 2, but now see, before we were trying to count a much smaller wave 2, and so it started to exceed upper levels. It didn't break the hard and fast rule of coming above which we had labeled as the starting point for this wave 1. But it ended up not being the case. So it hasn't broken that rule. So it still can be, but it just fits better, and the strength of it still fits better. And the fact that the market actually ended up incredibly strong into today's close. The NASDAQ index itself was up 373 points, as was the future at the time. So it just fits better. But again, we continue to count an ABC advance, a rally. And I believe if we can see that this look is looking like it's breaking down into a 5, so I'm going to call that the wave C. And this initial run up and run back down is an A and a B wave. So let's take it down where we can look inside all of this. So this is going to be the same count. But now I can back this up and we want to take a look at the inside of what's happening here. And we can do that again on, we're going to start it from, oh boy, it's up pretty high. Yep, there we go. You can see where this all comes in. So, a little bit tougher, but we can get it done. Here, you can see that off of that low, it was a 1, 2, 3, 4, 5, A, B, C, B, and now we're in another 5-wave structure up. I'm going to say 1, 2, 1, 2, 3, 4, 5 of 3, 4, and hopefully that would suggest that we get one last final wave up to complete an ABC up. Now, we can put parameters around that. We know that wave 5 is usually equal in length to wave 1. That's the most common. So that's going to be about 100 points. So if you take from that low, which is 26, to this low, a high, which is 134, it's about 108 points. So we got about 108 points, and if wherever this bottoms out, so it still actually can be in progress, we're going to be looking at like 106 points. 106 points from this level puts us up at about 13,346, which would bring us to a new high and could complete that pattern. Still holding within this, on this level that it shouldn't break under a previous view. But we now have to allow for the continued rally up to 13,427. And that would be the 618 retracement. If I bring it back out to our other chart, it can actually now fulfill a destiny of going up to here. What it can't do is actually go above the all-time high. Because now we've pulled that down, that initial, this is the initial 5-wave decline on an intermediate level coming off the highs. So what this wave 2 can't do is go and break that high, but it certainly can go here and it certainly can go there. And, you know, when you witness today's trading, it all fit pretty cleanly what they were doing. And we continued to trade what was in front of us as it began to break above resistance levels, which I really did not think it should or would. And when it did, it just drew my attention to pulling this back and to look at what was happening, because I continued even yesterday when I was looking at the charts, having trouble with how I had counted that. As it unfolded, I needed to go back and make that revision likely earlier. But bottom line, we did make the revision and it does fit the way the market is trading. And now we can put some additional parameters on where a rally could actually lead and still then turn and develop into a pretty severe decline. Because again, when you see this and you're just trading on a daily basis, you're thinking that's pretty bullish. It's going to continue. What we can do? Well, now we can put some parameters on that framework and say it would be to here. Now it could go all the way up to that area of the all-time high. Again, my personal feelings is that it should not and likely will not do that. There remains a lot of bubble-like atmosphere out there in these markets. And the overall pattern does show that we can have this rally, but it should remain 3 waves. That is what the charts are telling me at this particular moment. that we have now got 5 waves down. We had it before, but now it's built on it, and we've taken it up in a whole other level. So in other words, we continue to build that. We're getting 5 waves down now on an intermediate level. Next would be 5 waves down on a primary level, and that would be, that's where I think we're going. So there's still a lot to unfold. There's still wave 2 to complete, wave 3 down, 4 up, and 5 down before we complete that primary level decline. So you're going to see these building blocks continue to add to what we're doing. And you're going to be able to see that how this all fits together. Now, it's not a perfect science, but it does really help and enable you so that you're not battling against something on a daily basis when you step into the market. You've got levels that you can play on now, and you've got levels that if it breaks above or below, you know what you should be doing because you've got an idea of where the next levels are going to be coming in. So you can trade on a day-to-day basis, and you can be profitable each and every day because you're facing the market more open and more ready. You've got your points, you've got levels, and using your moving averages, using Fibonacci, and using Elliott. So we can put characterizations around what type of move we should be expecting and what we can be looking for. See, each one will have its own personality. And when you begin to just feel that in the market, you can start to work with the different Fibonacci relationships that go along with that type of a move, the moving averages, what happens in that type of a move, and how you expand and go out from your hourly to your daily to your weekly to your monthly. And that, when you're finally out there looking at a monthly, which we likely should be doing, you're going to be able to see that this is how this unfolds on a long-term basis. And I'm going to leave it there. So for tomorrow, we have parameters. Right now, I'd be looking for a continued, the rally or the decline to finish up, for the rally to continue, move above the high thus far, which is 13,328. Yes. And likely move up closer to 13,427. But again, we were thinking that around 13,004, again, that 440, 65, right, all in that area, seems to come right back again. 13,347. Now, is back in play. A break above there is no longer a major concern. In fact, should the market do it, it's not going to change the overall outlook. We have resistance at 13,427. Additional resistance, which should even prove stronger, at 13,535, but the market could break and move up to an additional level. Again, depending on what kind of power comes in behind it. Do not fight the market. We have our levels. You can trade it, and in both directions. So that would be the limitations. Initially, I probably would not be looking for much above this level before we got to see some type of a pullback. Again, if it starts to break down, you're going to be looking at those same areas. You're going to be looking at the 200-day moving average. You're going to be looking at the 50. You're looking at all of these. These are starting to switch around. But again, the 20 and the 8 can slip back below the 50, and that puts it back in line. It puts it in direct line to have a more stronger decline. So when the 20 falls below there and the 8 comes back down and falls below the 20, it's not going to take much, because you can see that this rally pushed it all back into the more bullish type of a scenario, and the 20 is getting ready to close in on the 200. And it just might. In fact, if we're looking for new highs, it likely will find its way above it and then turn again. So that's what we have going on. That's what we're going to be looking for. Once a primary wave 2, that's what we got to finish out here. So we're going to have an ABC of intermediate degree. And within those, we're having minor degree moves. So within that, we've had a minor ABC up to finish an intermediate wave A. We've had a pretty strong ABC down to finish the B wave. And we had an additional rally to, again, finish off or to finish the B wave, and then we're heading a 5-wave rally to finish the C wave, which will complete wave 2 on a primary level. If not, we may have to count it out and realize that it's only wave A. We're going to get another rally, maybe an inside day of a type of a decline, and then an additional rally. So we have to allow this all to play out on the intermediate level and on the primary level before we're going to be able to declare it over in terms of that the next stronger decline is going to begin. So have a good evening, everybody. Good trading tomorrow, and the next update will be tomorrow evening.